Hey everyone, and welcome back to the channel. We're all about giving you the knowledge and insights you need to navigate the financial world. And today we're diving into a topic that's been generating a ton of buzz lately. Spot Bitcoin ETFs.
Yeah, it seems like they're everywhere right now.
Right. It's all about making investing in Bitcoin as easy as buying a stock, which is a pretty big deal.
Definitely. It's been fascinating to see the shift. I mean, the SEC initially hesitated.
Yeah.
But now they're actually approving these ETFs.
Yeah. For those who are new to the world of ETFs, or maybe just need a refresher, can you give us a quick breakdown of what an ETF is and how it works?
Absolutely. An ETF, or exchange-traded fund, is essentially a basket of assets that you can buy or sell on an exchange just like a stock. These assets can be anything from stocks and bonds to commodities or, in this case, Bitcoin.
Got it.
When you buy shares of a spot Bitcoin ETF, you're not buying Bitcoin directly, but rather a portion of the ETF's holdings, which are held by a regulated custodian.
So it's like having a slice of a Bitcoin pie without having to bake the whole thing yourself. I like that.
Exactly.
So what makes spot Bitcoin ETFs different from the Bitcoin futures ETFs we've heard about before?
That's a great analogy. The key difference is in what the ETF actually holds. Spot Bitcoin ETFs hold the actual Bitcoin, while futures ETFs track Bitcoin futures contracts. And those contracts are agreements to buy or sell Bitcoin at a specific price on a future date.
Okay, so one is about owning the actual Bitcoin, and the other is like betting on its future price.
Precisely. Spot ETFs also offer more transparency because you know exactly how much Bitcoin backs each share you own.
That makes a lot of sense. So spot Bitcoin ETFs finally launched in January 2024 after getting the green light from the SEC. What were some of the regulatory hurdles that had to be cleared for this to happen? It feels like a pretty significant shift in their perspective.
You're right, it was a big shift. The SEC had several concerns initially, mostly around market manipulation and the lack of established regulated exchanges for Bitcoin.
They wanted to ensure investor protection.
Exactly, and market integrity.
Yeah, of course.
Over time, as the crypto market matured and more regulated exchanges like Coinbase emerged, the SEC became more comfortable with the idea.
I see.
The launch of these ETFs is a strong signal that regulators are starting to see the potential of crypto while still addressing the associated risks.
That's a really important point about the evolving regulatory landscape. It seems like the crypto world is maturing and finding its place within traditional finance, but I'm sure there are still plenty of skeptics out there. What are some of the main arguments against spot Bitcoin ETFs?
One of the biggest criticisms is that these ETFs could actually increase volatility in the Bitcoin market. The argument is that easier access could lead to more speculative trading and amplify price swings.
Oh, so it can make things even more unpredictable?
Potentially, yes. There's also the concern that large institutions could potentially manipulate the market through ETFs.
Okay, so those are some pretty serious concerns.
They are valid concerns, and it's something that both regulators and investors need to monitor carefully.
Makes sense. It's not a simple good or bad situation. There are valid points on both sides. For those who are considering investing in a spot Bitcoin ETF, what are some of the key advantages they should be aware of?
Well, we've touched on a few already. They're incredibly convenient, highly liquid because you're trading on established exchanges, and they offer a more regulated way to invest in Bitcoin compared to buying it directly.
So you're basically simplifying the process.
Exactly. Plus, with a spot Bitcoin ETF, you don't have to worry about securing your own Bitcoin, which can be a daunting task for those unfamiliar with crypto wallets and security protocols.
Yeah, especially with all the stories we hear about hacks and stolen crypto. Having a regulated custodian handle that aspect definitely provides some peace of mind. But like with any investment, there are always downsides. What are some of the risks associated with spot Bitcoin ETFs?
You're absolutely right. No investment is risk-free. As we mentioned, Bitcoin itself is highly volatile, and investing in an ETF doesn't erase that risk.
Right. You can still lose money.
Exactly. You could see big gains, but you could also experience significant losses. And even though there's more regulation now, there's still some uncertainty. The crypto world is changing rapidly, and it's hard to predict how future regulations might impact these ETFs.
Okay, so regulatory risk is still a factor.
Definitely something to keep in mind. Then there's the issue of fees. Like any ETF, there are management fees that can eat into your returns over time, so it's always important to factor those in when making your investment decisions.
That's such an important reminder to do your research. Don't just jump into any investment without understanding the potential downsides, but focusing on the potential. What kind of impact do you think spot Bitcoin ETFs could have on the future of Bitcoin and cryptocurrency as a whole?
That's a great question, and it's one that a lot of people are asking. Some experts believe that ETFs could be the catalyst that truly brings Bitcoin into the mainstream. Imagine a world where investing in Bitcoin is as commonplace as investing in stocks.
That would be a huge shift.
It would. Increased accessibility could lead to a surge in demand, potentially driving up the price of Bitcoin.
Yeah.
But it could also introduce more stability to the market.
That's an interesting point. Increased demand and more stability. It seems counterintuitive, but I can see how those two things could coexist.
Exactly. With more institutional investors entering the market through ETFs, it's possible that we could see less extreme price swings. Of course, there's always the flip side. Easier access could also fuel speculation, potentially leading to bubbles and overvaluation.
So it's kind of a double-edged sword.
It is. It's a delicate balance, and the long-term impact remains to be seen.
It's a fascinating time to be following the crypto world. We've covered a lot of ground so far, from the basics of ETFs and Bitcoin to the regulatory landscape and potential impact of spot Bitcoin ETFs. But this is a deep topic.
Yeah.
And there's always more to explore.
Absolutely. And it's important to remember that spot Bitcoin ETFs aren't a monolithic entity. There are various offerings out there, each with its own nuances.
Right. So for our viewers who are thinking, okay, this sounds interesting, but how do I actually choose a spot Bitcoin ETF? What factors should they consider?
That's a great point. It's easy to get overwhelmed with all the options. One of the first things you'll want to check is the expense ratio. This is the annual fee charged by the ETF provider to cover operating costs.
Okay, so like a management fee.
Exactly. Even a small difference in fees can significantly impact your returns over time. So it's worth shopping around for a low-cost option.
Makes sense. Those fees can really add up, especially if you're planning on holding the ETF for the long term. What else should we be paying attention to?
You'll also want to consider the ETF's trading volume, which is a measure of how actively it's being bought and sold on the exchange.
So basically how easy it is to buy and sell.
Right. A higher trading volume means more liquidity, which makes it easier to buy and sell shares without significantly impacting the price.
So you don't want to get stuck with an ETF that's difficult to trade.
Yeah.
Especially if you need to adjust your portfolio quickly. What other factors might be important to consider?
It's always a good idea to research the ETF provider and their track record. Look for a company with a solid reputation, experience in managing ETFs, and a history of providing good customer service.
So basically do your homework on the company behind the ETF.
Exactly. Transparency is key in this space, so you want to feel confident that the provider is operating with integrity.
It sounds like a lot to think about, but it makes sense to do your due diligence. This all might still feel a bit theoretical for some viewers, so let's ground it in reality. Can you walk us through a hypothetical scenario of how someone might use a spot Bitcoin ETF as part of their investment strategy?
Certainly. Let's say you're a long-term investor who's bullish on Bitcoin, believing in its long-term potential, but you don't want the technical hassle of setting up wallets, managing keys, and securing your own Bitcoin.
You just want a simple way to invest.
Exactly. A spot Bitcoin ETF could be a perfect solution.
Yeah.
Instead of going through those complexities, you could simply buy shares of the ETF through your brokerage account, gaining exposure to Bitcoin's price movements without the headaches.
Okay, I can see how that would be appealing for someone who's comfortable with traditional investing, but wants to dip their toes into the crypto world. But as you've emphasized, it's crucial to remember that Bitcoin is notoriously volatile. So how should investors approach risk management when it comes to spot Bitcoin ETFs?
You're right. Volatility is inherent to Bitcoin and the crypto market as a whole. The golden rule of investing always applies. Never invest more than you can afford to lose. It's especially important with a volatile asset like Bitcoin.
So don't bet the farm.
Exactly. It's also crucial to have a diversified portfolio. Don't put all your eggs in one basket, even if you're really excited about a particular investment.
Diversification is key. That's something we talk about a lot on this channel. Speaking of diversification, the crypto space is constantly evolving. We've seen the rise of decentralized finance, or DeFi, and non-fungible tokens, or NFTs. Do you see any connections between these trends and the future of spot Bitcoin ETFs?
There are definitely some interesting connections. DeFi in particular is all about creating a more open and transparent financial system using blockchain technology.
So cutting out the middleman.
Exactly. It aims to remove intermediaries like banks and give individuals more control over their finances.
I see.
There's potential for DeFi platforms to offer their own versions of Bitcoin ETFs, or even entirely new types of investment products built on blockchain technology.
Wow, so spot Bitcoin ETFs might just be the beginning.
It's still early days, but the possibilities are exciting.
It sounds like it. But innovation often comes with challenges. We can't talk about spot Bitcoin ETFs without addressing the concern some critics have raised about their potential to exacerbate market volatility and manipulation. What are your thoughts on those concerns?
Those are valid concerns, and it's something that regulators are keeping a close eye on. The influx of new investors through ETFs could potentially create artificial bubbles driven by speculation rather than fundamentals. And the ease of trading large volumes through ETFs could give large institutions the ability to manipulate the market, potentially putting smaller investors at a disadvantage.
So it's a tightrope walk.
It is. It's a delicate balance between encouraging innovation and ensuring market integrity.
You mentioned that regulators are watching this closely. Do you have any insights into what steps they might take to mitigate these risks and ensure fairness in the market?
Regulators are exploring various options such as imposing position limits to prevent large players from controlling too much of the market, implementing circuit breakers to halt trading during extreme volatility, and increasing surveillance to detect and deter manipulative activities.
So they're working on safeguards.
Yes. The crypto world is still relatively new, so regulations are evolving rapidly to keep pace with the innovations.
It's clear that spot Bitcoin ETFs, while offering exciting opportunities, also raise important ethical and societal questions.
You're right. We can't ignore the broader implications of this technology. Bitcoin's decentralized nature challenges traditional notions of finance and monetary policy.
It's a whole new way of thinking about money.
It is. As Bitcoin and other cryptocurrencies become more mainstream, it's crucial to consider their impact on our financial system and society as a whole. For example, some experts worry that widespread adoption of Bitcoin could undermine the role of central banks and governments in controlling monetary policy.
That's a big concern.
It is. Others see it as a potential catalyst for a more democratic and equitable financial system. It's a complex debate with no easy answers.
It's a debate that we need to have, though. As we embrace innovation, we also need to be mindful of its potential consequences. Speaking of consequences, one of the biggest concerns surrounding Bitcoin is its environmental impact. The energy consumption required for Bitcoin mining is significant and raises serious questions about the sustainability of this technology. Do you see this as a potential roadblock to the wider adoption of Bitcoin and, by extension, spot Bitcoin ETFs?
The environmental impact of Bitcoin mining is a legitimate concern and a significant challenge for the industry. As the demand for Bitcoin grows, so does the energy consumption associated with mining.
Right, it's a bit of a catch-22.
This is leading to increased scrutiny from environmental groups and policymakers. However, there are efforts underway to make Bitcoin mining more sustainable, such as transitioning to renewable energy sources and developing more energy-efficient mining hardware.
That's encouraging to hear. It seems like the crypto industry is becoming more aware of its environmental footprint and taking steps to address it. But shifting gears a bit, Bitcoin is often touted as a potential hedge against inflation, especially with rising inflation rates globally. Can you explain the rationale behind this view and whether it holds up in reality?
Bitcoin's limited supply, there will only ever be 21 million Bitcoins in existence, is often cited as a key factor in its potential as an inflation hedge.
Because it's scarce.
Exactly. This scarcity combined with its growing adoption could potentially lead to an increase in value over time, similar to precious metals like gold.
Like digital gold.
Right. However, Bitcoin's historical volatility makes this a complex issue. While its long-term trend has been upward, its price has experienced significant swings, making it difficult to definitively label it as a reliable inflation hedge.
So the jury's still out on that one.
It is.
You seem like Bitcoin's potential as an inflation hedge is still up for debate. Another topic generating a lot of buzz lately is central bank digital currencies, or CBDCs. These are essentially digital versions of fiat currencies issued and backed by central banks. How do you see CBDCs impacting the future of Bitcoin and other cryptocurrencies?
The emergence of CBDCs adds another layer of complexity to the evolving financial landscape. Some believe that CBDCs could pose a threat to Bitcoin and other cryptocurrencies, as they offer a more stable and regulated alternative backed by the full faith and credit of governments.
So they could be seen as competition?
Potentially, yes. Others argue that Bitcoin's decentralized nature and limited supply will continue to make it attractive, even in a world with CBDCs.
So it really depends on which perspective you take.
It does. It's too early to predict the outcome. But the interplay between CBDCs and cryptocurrencies will undoubtedly shape the future of finance.
It's fascinating to witness this interplay between traditional finance and the emerging world of crypto. We've covered a lot of ground today, from the mechanics of spot Bitcoin ETFs to the broader implications of Bitcoin and cryptocurrencies for the future of finance. It's clear that we're at a pivotal moment, and there are both exciting opportunities and challenges ahead.
Absolutely. It's a time of great transformation. And it's crucial for investors to stay informed, approach these innovations with a balanced perspective, and carefully consider both the potential benefits and risks involved.
Well said. Before we wrap up, I want to remind our viewers that this is just the beginning of the conversation. We'll continue to explore these topics and more on our channel, so make sure you're subscribed and hit that notification bell so you don't miss any future deep dives into the world of finance.
We're committed to providing you with the knowledge and insights you need to make informed investment decisions, whether you're a seasoned pro or just starting your financial journey.
We believe that financial literacy is key to empowering individuals and creating a more inclusive and equitable financial system.
And we're here to support you every step of the way.
Now we want to hear from you. What are your thoughts on spot Bitcoin ETFs?
Are you considering adding them to your portfolio?
What excites you most about the future of cryptocurrencies?
Or maybe you have concerns about the risks involved.
Share your insights, questions, and perspectives in the comments below.
We love hearing from our community and learning from each other.
Thanks for joining us on this exploration of spot Bitcoin ETFs.
Until next time, keep learning, keep exploring, and happy investing.